All right. Stani, how's it going?
Good, good. Hello, all degens.
Hello, DJs.
Who's getting yield today? Who's getting yield? Who's getting more than 5%?
Who's getting more than 5%?
Who's getting more than 10? No, you're getting. Who's getting more than 20? Who's getting more than 30? No one.
No.
Oh, what? Leak the alpha.
All right. And today's. Wait, what?
25? That's Carpet Key, so they do treasury management, so they know what
They know what they're doing.
They know what they're doing.
Today's topic is stablecoins in a multi-chain world. And Stani, can you give us your initial vision of Go and how it has evolved since inception?
Yeah, I think Go is very typical DeFi initiative that we see. It starts from one idea and then evolves and keeps evolving, and then you have a DAO that contributes to that process and keeps just iterating to something more bigger. Originally, we've approached Go from more of a product perspective, so we purely wanted to figure out the same thing that we always do at Aave, like how to build a better product for the users. You know, how to build it in a way that it is also better finance, which means bringing more transparency, auditability, certainty with smart contracts, community governance, and obviously best execution. And with Go, the idea was to bring reliability and predictability actually for interest rates for the Aave users. Now, one interesting thing about Aave is that it's a protocol that has been around for quite a while. I'm actually feeling quite old being here and talking to you all because it's been so many years since I participated first time to UTC. I think it was 2017 or 18, and back in the Eatland days, and things. The whole DeFi as a kind of a sector has evolved quite a lot. But Aave has seen, nevertheless, multiple market cycles, and it's really a product where when you build something like Aave, you need to keep in mind all the whole kind of like an end-to-end of a cycle. So how do you ensure that the product functions on a market that is going upwards, and how it keeps resiliency when the market is going downwards as well? And over the years, we've seen a lot of situations where, you know, in DeFi and also in Aave, where, you know, we were in a very close place where kind of I would say like Black Wednesday, Thursday, and all these scenarios. But effectively, we know that liquidity has more demand in some cases, and in some market cycle less. And with Go, our idea was that because we have these liquidity crunches, we can actually provide predictability for the yield for the users. And beyond the predictability, one of the use cases also was that you can earn on your collateral, which was a unique thing, that you have a lower a minting or a borrower rate for Go, because you're earning at the same time on Aave. And then like one more of like economical perspective for Aave was that it provides more revenue for the Aave DAO. And just to give you an example, 100 million worth of Go equals the same amount of revenue to the Aave DAO than 1 billion USDC. So when you put these two things aside and compare, it makes a lot of sense for the Aave DAO to embrace and grow to grow it further. So those were the things initially, but obviously now things are evolving, and the vision is evolving what Go actually is today and can be in the future.
Yeah, and how does Go differentiate itself from other stablecoins that are out there, especially in a multi-chain context?
Yeah, it's an interesting question because I think in some ways Go has also a lot of similarities than many of these stablecoins, and I see it as actually a benefit. So having this kind of like a little bit of a schemomorphic approach to Go. So we didn't create Go as being something like very unique, experimental, bizarre stablecoin experiment that could go well or could end up like going very badly. The way we approach is that, like any technology we build, is that how we can make something that maybe exists to some extent, make it maybe 5-10% better, and attract more users. And Virgil Abloh used to say that if you make something 3% better or new, that's essentially a definition of novelty. So aiming beyond that is really good. And I think having that familiar approach was important, building a decentralized stablecoin, and then on top of that, having the ability to actually earn on your collateral has been one key benefits for the users, because they have predictability on the rates and borrowing directly from the Aave DAO.
Can you go over how Go works and how it integrates into Aave, the protocol?
Yeah, and also the integration perspective is one of the things that is unique. So the way Go is structured is that some of you might know very well, and some of you might be new to the whole landscape of how Aave works. And Go is that there's this concept of facilitators, and facilitators are essentially buckets, a credit line that you can mint Go. And today, the main credit line is to mint Go against your deposits in the Aave protocol. And we have so-called stability module, a GSM, which has another bucket. And now, even more recently, as Go went cross-chain, so today you can actually use Go and earn with Go actually in the Arbitrum market. It essentially created a new facilitator. So the idea of these facilitators is that they are buckets of credit that can be minted depending on how the Aave DAO sees benefit for the treasury. So my kind of perspective is that this could be used for institutional use cases of giving credit across different DAO organizations, protocols, minting directly to other protocols Go as well. But down the line, various different kinds of payment use cases and even beyond. It's just a flexible structure of supplying and distributing Go across everywhere.
And what are the technical and security considerations you have when implementing Go, especially across chains?
Yeah, I mean, there's a lot of technology today. I mean, once we first announced and we're talking about Go going cross-chain, there was probably every single, I would say, like, I don't know, how do you call these, bridging protocols, BD teams reaching out and, trying to get you to use their technology, which is great that we have a lot of choices today. And I think one of the challenges is that, especially like Emilio, our VP of engineering, is in the audience today, and something we've been brainstorming quite a lot of when we try to choose the technology is to think about like what is the most simple way, fastest way, and also the secure way of having these types of deployments and expansion. So one of the options that we had is that we built something from scratch. And that will maybe take much more time. Or we use a specific messaging bridge. And essentially, we chose to use Chainlink's CCIP. And there's reasons for that. And one of the reasons is that as a technology, it's relatively simple to actually distribute messaging across multiple networks in a reliable way. And second thing is that Aave has been utilizing Chainlink price feeds for as long as Aave has existed. And in the early days of actually ETHLend, we tried to build our own Oracle, and we realized like how much actually time and dedication it takes to upkeeping it. So basically, that previous experience, having high quality data feeds, we transitioned to actually utilizing CCIP. And there was some kind of like a little bit like a technical challenges in terms of like being new technology. But after that, Go is essentially today live in Arbitrum, which is nice to see now.
Yeah. And when it comes to go-to-market, what strategies are you employing to encourage the adoption of Go across blockchain networks?
Well, first I was thinking of like hiring like a kind of like like a very volatile intern to manage our social media accounts. But I think everyone is doing that at the moment. So, so then I was thinking that maybe like the best thing is that actually once the Go is there, and obviously, like it's not really sufficient that technically you can actually utilize Go and do whatever you want to do on Arbitrum, which is like a lower price point than, for example, Ethereum, and that brings inclusion, and that essentially brings more users and also appetite for people to try things in DeFi. No one will try anything if you have to pay $20 of transaction fees. Like, it's just the transaction fees has to be as low as possible. But I think something that helped quite a lot on the go-to-market perspective is that the way the Aave ecosystem works is that Aave Labs is one of the contributors, and we focus quite a lot on the technology. We do some other things like events. We host Raves, but we try to have that technical contributor perspective to things that we create, and then you have these other service providers within the ecosystem that are actually putting a lot of effort in growing Go. And from various things like liquidity pools and other initiatives. And surprisingly, a lot of DeFi protocols and partners has been very active on actually helping to grow Go, and that has been like really amazing to see how this like a human composability aspect has been working.
Yeah, and there's a lot of different parties involved when it comes to a stablecoin. It's not just the issuer. You have oracles, you have liquidity providers. There's all these different partnerships that come into making a stablecoin successful and that scales. So what partnerships and collaborations are crucial for the success of not just Go, but for stablecoins in general, in your opinion?
I think it's relatively fair to say that stablecoin, like growing a stablecoin, is fucking hard.
It's really hard, yeah.
So if you are planning to like, you're thinking about stablecoins, it's a really tough field, and especially like without incentives. So incentives play a big role of accelerating a lot of the growth. And if you look at some of the older stablecoins, decentralized stablecoins in our space, they're still relying on incentives. But the whole kind of like a key ingredient of any stablecoin is the liquidity. So you can mint as much as you actually have ongoing liquidity. And that's an interesting thing, because like if you mint tons of let's say Go, and the liquidity decreases, and you have to unwrap some sort of positions that might affect Go market price. So you have to have liquidity both ways. And I think, especially in this type of a market situation, liquidity has a shortage at the same time. So I think that's one of the hardest things to approach when we think about Go. And also the perspective is that Aave has been known for building a kind of a lending protocol. So essentially, like, we don't have an infrastructure of like a decentralized exchange where we can combine with incentives. We could actually have like a lot of tailwind to grow Go. But on the other side, we have the ability to collateralize, which is like the bread and butter of the Aave protocol. And that collateralization is something we haven't yet turned on, but it will happen at some point. And that shows the power of the growth of Go. And now Go is 85 million in mints total. And that basically gives the amount of revenue that's 850 million USDC will give to the Aave DAO.
Yeah, and as more L2s and chains come online, where do you see the role of stablecoins evolving, especially as blockchains become more and more interconnected, both in our lives and also in general?
What I've seen a lot is that a lot of these L2s are creating like these ecosystems, and I think that has been the case for a while, right? So I was thinking that maybe we'll see like dedicated rollups more, and this is something that the Aave DAO is also thinking, and part of our proposal we submitted from the Aave Labs on the basically Aave 2030 type of a vision where we're essentially building a new iteration of Aave v4. We're proposing also a Aave network, which could be a liquidity hub with cross-chain liquidity movements across other networks as well. So I was thinking that we've seen like this ecosystem play happening, and now more of like dedicated rollups for different teams and different use cases. I'm personally hoping to see more rollups that have a specific use case and caters some sort of value-added behavior and is optimized to that type of.
Can you give an example of the rollups you would like to see? These like use case rollups.
Yeah. So one thing could be really, really cool is seeing like a Validium rollup for Go. And the reason for that is that a Validium can actually bring a price point that is a fraction of L2, let's say optimistic or ZK-based rollup. And that means that you can have a really low price point for payments. This is really nice for day-to-day payments, for example, settling online payments, but also you can activate some interesting new use cases and payment events. So for example, if you scroll your social feed, and every scroll triggers some sort of a payment, that's an example. Or you're reading a blog post, changing a chapter or like an online book or something, and that can initiate a payment transaction. So you could actually have more utility for payments, like something that's really kind of like if you think about internet payments, the design space now is very limited. So we're used to subscriptions. We're used to basically going to a website and pay, I don't know, $10 a month, and you have to subscribe for a year, and that's the design space at the moment, and that really isn't like applicable to everything, and that's why that experience really is annoying to people. But maybe you want access to news and information, and pay whatever the information is worth without actually subscribing to a product. Yeah. So there's a lot of design space.
And taking a step back, we hear a lot about L2s, but we haven't heard too much about Validiums yet. For people unfamiliar in the audience or at home watching this, can you go into like what Validiums are and how they work?
Yeah, I mean, Validiums are, they work kind of like a roll-up. So you basically post state transitions into Ethereum. So you take security from Ethereum, but you're not storing the state on Ethereum itself. So you are actually storing in another location. And that third-party location can be, for example, a data availability provider. There's multiple. There's Celestia, Avail, EigenDA as an example, or you can use the Validium node itself as a location. And what it does, it significantly reduces the price point of transacting on that Validium chain, and you still take proofs of all the. So Validiums are ZK-based, so you still take the proofs and you store those proofs on Ethereum, but not the state on Ethereum. And that's the kind of like a key ingredient. So what you're doing here is that you're trading a little bit of kind of like at the security side, but not to the extent that it's you don't have any security, and you're opening up to new use cases. And this is really interesting for like social gaming and payments, in my opinion.
Yeah, and going back to stablecoins now, and there's always regulation on people's minds. So, in your view,
I was thinking we would skip that topic.
Yeah, we'll skip.
We can talk about regulation. We can talk about regulation.
We'll keep it light. How would you navigate the regulatory landscape right now, especially for Go?
I think it's really, I mean, it's pretty fair to say that, in some extent, DeFi is under attack at the moment. And it's really sad to see because obviously, like we in the room, we know the benefits of DeFi. Like once you start actually using DeFi, especially on L2s where you have low transaction cost, and you can see the transactions yourself, you can audit them, you can see the recipients getting the funds that you are sending, and you eliminate this kind of custody risk from one perspective, like the traditional custody risk. Completely, and you also are, you as a user, you can also participate in these communities and actually direct where the product or the protocol initiative should go towards. Like that's like a huge empowerment. And on top of that, you have like a global markets. Like you actually can transact with anyone, and you can also trail back all the way where where the people are coming and onboarding, and so you have that auditability. So it is like a really it's in really like nice moment at the moment from that perspective. But I think it's a place where we are now, where we kind of we have to fight for DeFi, and we have to fight for crypto. And this has been happening, and I think I give a lot of credit for example, for Uniswap for actually fighting some of these battles. Consensus is fighting some of these battles, and I'm pretty sure that there's more similar battles coming. But at the same time, there is such a strong demand on the institutional side. I think there's more excitement from institutions to actually use this technology and plug into DeFi. So there's kind of like a two different waves going at the same time.
And what is the institutional appetite right now? Are they curious? Are they deploying into DeFi and stablecoins? What have you seen?
Honestly, I think the institutions are quite involved already. So I mean, we saw with the Biddle Fund, BlackRock deploying was it totals 400 million into on-chain, backing the redeemability as well. That's just one initiative, and I think we'll see. And there's plenty of more, obviously, and we will see more and more coming. I think there's definitely appetite. It's a question of also how to structure it right, and how to participate, and how to manage these new types of risks. So when previously we had a custody risk, we might not have that in DeFi, but we have the custody risk comes from, for example, smart contract risk. That's the new custody risk, for example. And other types of risk. Governance is a risk. Like there's a risk, for example, if you do supply assets, what if the governance makes decisions? What's the governance alignment there? The underlying network risk. So there's a new type of things to actually explore. But I've seen a lot of excitement about, and I think it's partly also because of the ETFs, but that's only the investment side. I think the institutions that are here to use the technology itself, there's a high appetite at the moment.
Yeah, absolutely. And the institutions are here, and they're playing by our rules. Like with Buildle, they're on Ethereum. They're not on some permission blockchain. Like they're playing the game. Yeah,
I partially yes, because they want to plug into where things are done right at the same time. But that can change very quickly. If CBDCs become popular and the narrative goes towards that way, there's a big risk actually ending up in a similar control we are with the existing financial system. And remember that the first place we are in DeFi and excited about the blockchain is that it really removes the idea of like someone being able to control the whole monetary system and print loads of funds, for example, and control the economy. We're now moving essentially into an economy where we have high interest rates. So people were paying essentially a couple $100 for the mortgage, paying now maybe $2,000 on the mortgage. So those kind of things affect people very quickly, and that's just a centralized federal bank decision that changes the rates based on how the economy changes, and that's basically just the one part of the whole pie, because that's the Western world, and then you have also the East and kind of like the spread of between East and West at the moment with BRICS as well. So things are becoming like a really, I think we're here a lot because of that. We also don't like this type of progress in centralized governance over financial infrastructure. But I do think that it can go very wrong way as well. And that's why it's important that we kind of like guard these values and the very core what DeFi is.
And what would you tell people that want to stand on the side of DeFi and fight for DeFi? What would you say to all the enthusiasts out there in the stablecoin space to drive and look forward to?
I would say that the very big thing obviously is getting more people into the space. So it's not really it's fun to use DeFi amongst us and events like this where we all meet and talk about interesting, cool projects out there. But like, the really kind of like a long-term game really is to get more people and get in the right way that they know and learn about what actually DeFi is. And there's also this idea that kind of like the mainstream doesn't really care about what DeFi is. They want to just earn, and if DeFi is better, like it gets a lot of tailwind, and people will come. And partially it's true, but partially also like if we can educate along the way and get actually people to understand what they're doing and why the underlying technology is better. And I do think like the people who went to internet, went to online, realized what are the good things about internet that makes it interesting, or social media makes it interesting, and also like a better, let's say, like a media format, because you can comment on things, and you can have distribution. The same way as with DeFi, the more people understand the benefits, and in a simple way, I think that's going to be the key component. And then building towards that, building better UX as well. And a lot of the things that we see today in DeFi are very mature. So we see a lot of mature protocols. Aave has existed for, I think, like we've been working for past 8 years on solving one of the problems in the space. But a lot of the kind of like more important things is on the front end side. Like, how do you build something in between that actually is appealing to the normal users and mainstream, and get adoption that way. And then obviously the institutional aspect is really important, like how we can pitch what we do in a very way that institutions can participate.
Yeah, it's all about education, guys.
Yeah, and you need to build stuff as well.
Yeah,
so build it, and build it securely, and have a professional touch in what you're doing. I think one thing what I love about DeFi is that it's not as serious as traditional finance, and there's like there's a lot of like meme energy, but at the same time, like the stuff we're building, it has to work. Like it has to work, it has to be secure, and that's really core to succeed.
And I feel like right now we're kind of in the beta, we're in the early stages, everything's being tested out, and then eventually this stuff will scale into the trillions, and we're just at the beginning of it.
Yeah, I think DeFi is still small, right? And I do think that if you start building today and you're working in the space today, it's going to take 1 decade to get to even like a decent adoption, and not even like full, that DeFi is everywhere. It's a really, really long game, and that's just because of the nature of finance. It's people want maturity. They want to see that these protocols work, and they also want to see that the people who are governing these protocols, they also have a touch of professionalism there as well, and there's enough data to back whatever we're doing. I think those are things that are very important. The more professional the space is, without actually losing the connection with users and people who care about the space and ecosystem, that's the most important.
Stani, thank you so much.
Thank you.